Hey there, it's Ryan, finding a path to financial freedom for the self-employed. This week, we're going to talk about market capitalization, or the market cap. I'm relatively new to the stock market, having just begun investing in stocks last year, but even I've heard this term before. But what does it mean for us as we try to choose stocks to invest in? Let's find out. There are a lot of topics to cover when we're talking about the stock market, but I wanted to begin with some basic to me anyway, terms. You see, I believe that in order to make well-informed investment decisions on our own, we've got to understand what we're looking at when we search up a ticker symbol. So what does market capitalization mean? Market cap, or market capitalization, refers to the total value of a company's shares of stock. It's calculated by multiplying the price of a stock times its total number of outstanding shares. For example, a company with 20 million shares selling at $50 a share would have a market cap of $1 billion. For cryptocurrency, like Bitcoin, market capitalization, or market cap, is the total value of all coins that have been mined. It's calculated by multiplying the number of coins in circulation by the current market price of a single coin. In my journey to begin picking stocks, one topic I wanted to learn about early was how to judge a company properly. For my puny mind, an expensive stock must mean a great company, a really good investment, right? While a relatively affordable stock must be a sign of rough seas ahead. But after some digging around, I found that one of the first lessons in stock investing is that you cannot judge a company by its share price alone. An example of this would be if you took a stock like Apple, which at the time of this taping was running about 170 shekels a share. Also, in this moment, everyone's favorite Mexi-casual restaurant Chipotle closed yesterday at just under $1,500 per share. If you took only those facts into account, much like I would have, I'd assume Chipotle must be worth easily 10 times as much as Apple. In my heart, I'd know it wasn't true, but who knows? Maybe they're slinging way more carnitas than I'm aware of. This is where market cap comes into play. In the case of these two companies, according to the fine folks over at The Motley Fool, Apple has roughly 17 billion shares outstanding compared to just 28 million shares of Chipotle. This means that Apple has a market cap that is nearly 50 times bigger than Chipotle. That seems to be in line with the relative importance of each company to the global economy and the stock indexes that most investors follow. Although tell that to my tummy when all I can think of is a super savory carnitas bowl with the cauliflower rice, the fajita veggies, and that salsa with the corn in it. The MacBook Pro, on the other hand, is marginally less delicious, but you get the point. A big reason for starting investors to take note of market cap is that it's often relative to the risk versus reward profile of any given stock. Large cap companies have already done much of their growing and are relatively stable compared to small cap companies who are typically younger and more risky. There are a couple of ways that stocks are organized by market cap, but we'll keep to the big three categories here, saving the megas and the micros for another conversation. You'll get the point from these three. First, large cap stocks, those with market caps above 10 billion to 15 billion or so. These companies have already established themselves as successful businesses with significant revenue. Not all of them are profitable, but most are at least on the path towards profitability in the long run. Next, mid-cap stocks, or those with market caps around 2 to 3 billion at the low end and up to the bottom edge of the large cap range, aren't well established in the marketplace. They've demonstrated an ability to stand out from the small cap crowd, but they haven't yet shown the staying power to move to the next level. The potential returns are greater with mid-caps than with large, but so are the risks involved. And finally, small cap stocks, or those with market caps below 2 billion or so, haven't yet proven themselves to investors. They often have plenty of potential, but that doesn't guarantee that they'll be able to execute on promising ideas and turn them into business success. Those that do manage to thrive offer huge rewards to their shareholders as they evolve into becoming large cap stocks, but those that fail can cost shareholders almost everything, amplifying the risks involved. All that said, the name of the game when investing is avoiding risk. But really, it's more about striking a balance. Too much risk or not enough will both end in portfolios that won't go the distance for you. No one can tell you what your risk profile should look like, but I can say typically the younger you are, the more you can afford to gamble on the riskier options, if for no other reason than you've got more time to recover than the old-timers do. I can say, given my goals around savings and the tight timeline I've given myself to get it done, my risk profile is probably a tad higher than a lot of 40-somethings. By my age, or maybe a little older, most turn to more conservative or stable options than I have. But for you, That's a totally personal decision. While it's too simple to say that the best growth opportunities come from the smaller cap stocks alone, you can miss out on big wins by not being open to other information. A great example of this is Tesla. In 2020, Tesla was already pushing the $100 billion level in market cap, and some had thought they'd already hit their peak. But Elon and co., not to be counted out, had a few tricks up their sleeve and saw gains of more than 700% that year. And today, just 2 years later, the market cap at Tesla is more than $1 trillion. In the end, the best strategy is still to invest in companies that have promising business models that offer the best chances for long-term growth. So do your research. Sure, you can roll the dice on AMC or GameStop based on the buzz of your favorite subreddit, and maybe you'll even win. But before investing in anything, the traditional advice, not that we give advice on this channel, is that you should always do your homework and invest wisely with companies you know, like, and trust. Thanks for joining me today. Please tick that like button if you haven't already, click to subscribe, and hit the bell to be notified every time I drop a new show. Also, if you found this content or anything on this channel valuable, share it and spread the good word. Get $10 in free Bitcoin when you buy or sell 100 or more in crypto at Coinbase at the link below, and join me here every Tuesday and Friday. We'll see you guys next time.